Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on February 9th. I hope everyone has a very fun and exciting Super Bowl weekend. Not much new with the market this week. It's just kind of what I said last week, just more so in both directions. The trend of the major indexes is still up, led by NASDAQ, S&P 500, big cap stuff. And the action of leading growth stocks is great, with a lot of them continuing to zoom higher. Not all of them. There's been a few more that have, kind of chilled out for a bit. But obviously, there's still a lot of earnings gaps higher and stuff like that. On the flip side, the broad market, not even the broad market, but like the average big cap stock, is just not doing anything. Not going down, just not going up. So there's kind of that growing divergence. You have interest rates cracking their intermediate term uptrend, or downtrend, I guess I should say. Bonds cracking their uptrend. And just not a ton of great entry points. I mean, at least among the strong stocks, I look at a lot of charts, say, wow, that looks great. But would I put a ton of money in that stock right here? No, probably not. I do think there could be some opportunities if we get a rotation, even to some growth names that are just outside of, AI and chips and networking and stuff like that, cybersecurity. I do think there could be some opportunities there if we see the buying pressures broaden out. There are some earnings reports in the next couple of weeks that I'm interested in. But, right now, I think it's the same sort of story. I'm bullish. I don't want to give the impression I'm really super cautious. I think the market can be a lot higher down the road, and some of these stocks can be a lot higher. At the same time, I'm not flooring the accelerator here. Some partial profits, selling some laggards and trying to redeploy those proceeds into some fresher leading stocks that ideally will emerge here in the next, 1, 2, 3 weeks. We'll see how it goes. Okay. In Cabot Growth Investors Model Portfolio, I actually sold a couple of small laggard positions. Holding the cash for now, we're up to about 30% cash. My guess is I'll put some of that to work here, assuming things don't kind of unravel or there's a huge change in character. So we're looking for opportunities to put some of that to work. But again, being discerning on the buy side and not afraid to hold a little bit of cash here and see how things play out, okay? All right, let's hop into the charts as usual. I'm using MarketSmith, which is a product of Investors Business Daily. You can learn more at marketsmith.com. Get on my pen. So you can see here's the NASDAQ. It's up again as I record this today. It's extended, but I'm not going to make too much of it. I'm more of a trend guy. But it is extended here, S&P 500, running higher, 5,000. A lot of times what you do is you click these round numbers, 5,000, 4,000, for the first time, or, you see it on the Dow a lot. It makes headlines, and then maybe you pull back. So we'll see how that goes. But you can see the trend is clearly up. New York Composite, same sort of thing. Trend is up. Let's look at here's MDY, which is the mid caps. This is just same thing I mentioned last week. It's not bad. This is the small caps. This is the worst one, quote unquote, the worst, but it's still above the 50-day line. Okay. And even if you look at RSP, which is the equal weight S&P 500. So we have this divergence, and like I said last week, like I wrote this week, it's divergences they happen all the time. What it tells you, the more it goes, is sort of, risk of some sort of change in character is rising. Doesn't mean it's going to happen next week, or it might take a month. It might not happen. So it's just sort of a risk measure, so to speak. Okay. So right now, what I would say is that the divergence is happening because the buying is concentrated. We're not seeing, if this was down here, okay, and the NASDAQ was like that, that would be more concerning, I guess, because there would be actual selling pressures out there. Right now, we're seeing sporadic selling pressures, but the number of stocks hitting new lows on the New York is still pretty well contained on almost every day. You have some potholes here and there, but it's not like you're seeing this sort of, even small caps, like I mentioned, they're not falling apart. They had this correction earlier in the year. They hit a higher low. Now they're perking up. They don't look great. I would still say it's definitely a laggard, but it's not like, there's some massive selling pressure and it's literally just, tech and AI going up, that sort of thing. Okay, so we'll see how it plays out, but the trend is up. The action of leading stocks is up. And I wanted to mention this just real quick, which I think I have on this video. I definitely have written about it. Again, I come on here every week, so, we're talking about what happened this week. But I mean, I'm more of an intermediate to longer term guy. And this is the IBD 50 index, which again is just good relative strength, good earnings growth, good return on equity, those type of names, okay, which is the pond I generally fish in. I don't actually look at this list, not that you should or shouldn't. I'm just saying it's a type of stock, okay? And this is just what happened, during the bear market and then during 2023. So, bigger picture, if all goes well and the Fed cuts rates this year and the world doesn't, implode or whatever, this should be, quote unquote, should be, who knows, early in the advance, relatively early, big picture. Okay, so I don't want to give the impression that, I come on here and talk about keeping feet on the ground. To me, it's just the flip side of, when things were down here, we were defensive, we had a lot of cash, but I was saying make sure your watch list is ready. Here's some names holding up, and if we get going, you could buy them, and finally things clicked, obviously, in November. It's just kind of like that right now, just the opposite, where it's just saying, hey, ride your winners, enjoy it, but, don't go take out a second loan on your house and start throwing money at, your favorite AI stock, so to speak, okay? Now, with all that said, FFTY is kind of an ETF for that. So this is leading stocks right here, very strong, very extended, but hopefully early in the big picture right now, though, clearly extended on the upside, okay? But we are just seeing, this is ARK, had a big correction, now it's coming back, IPO fund correction coming back. I would say the XLP, no rush into defensive. It's not like, things have changed. There's a rush into defensive stocks. And I would just say this is very, very tertiary, but I do keep a distant eye on this is GameStop. It's up today, so it's up 5% today. So who knows, maybe it's starting, but we're not seeing yet the super speculative juices flow where you have the GameStops and the Beyond Meat, fake meat. Again, today they're popping, but this is, you can see this happened for 2-3 weeks and then it just disintegrated, okay? Wayfair is another one, W. I mean, these are, like I said, very, very tertiary indicators, but it's not like we're seeing all the speculative junk start to flow. Now, maybe a week or two from now, that's what's going on, and that will be another sort of yellow flag. But to me, that's kind of there. Now, I would say, not just extended, but so this is ARM Holdings. I like the story. It's a new issue. It's dominant. I'm not going to get into the story here. But, it sort of gapped up on earnings to 100, which is a huge gap. And then they ran it to 125 during the day. I think it was up like 70% during the day. And then it came down. So it looks good. I have nothing against it. I'm not predicting where it goes. But you are getting some of that, a little bit of, it's one thing to have earnings gaps, nothing to have froth. This is just SMH, which is clearly the leading group, just extended to the upside. So again, I'm just saying, I'm not trying to be cautious. I'm not saying go sell all your winners. I'm certainly not saying short stuff or anything like that. I'm just saying, November and December, a lot of things were kicking off their advances. Today, they're 2, 3, sometimes 3.5 months into those advances. So, the risk profile is a little different in terms of how you want to buy and all that sort of thing, okay? On the flip side, we also want to say, talk about here rates. I don't want to forget about this. Again, this chart's a little messy. It's kind of neat on stock charts. It looks a little bit better. But this is the 10-year note. And I guess all I want to point out here is just it's above the 50-day line, and it's kind of held here for a few days, and it's testing sort of new, multi-week highs back to like early December, okay? And if you look at the 5-year note, this is the yield, not just the note, okay? Again, holding above the 50-day line, out above, I don't know, whatever, 6-week highs or whatever. Does that, can we come in next week and rates sink? Yes, we could, but we're starting to see, my point is that we're starting to see this downtrend. I guess I'll say the downtrend is cracking. I wouldn't say it's cracking, into an uptrend yet, but it's certainly not going down. I think it's fair to say that the intermediate term trend is going from down to at least neutral, if you want to think of it that way. Okay, and then of course I mentioned last week, it hasn't been as big an issue this week, but this is the KRE, the regional banks. Ideally, this was just a shakeout, and I don't need KRE or XLF or whatever financial stocks to go up for me to be bullish, but it's usually best if they're not like cratering, because that can really throw some fear into the market, So we'll see how it goes. So far, it hasn't really been able to bounce. I mean, I had this reversal, but you can just see on the daily chart, it basically hasn't bounced. So, if this kind of continues lower and there's some issues, that's just something that's out there. Plus, rates are going up and all this. So, like I said last week, there's some yellowish flags, whatever you want to call them, some things to watch, I guess is how I would put it. But the primary evidence is bullish, so I'm still bullish. But like I said, keeping the feet on the ground. Okay. When it comes to new buying, let's get into the fun stuff. Individual stocks. Yeah, I would just be I'd just be more discerning. and looking for things that even if they're in a strong group, maybe they've just pulled back, they're totally fine. So this is Advanced Micro Devices. Again, it's had a huge run. It's doubled from, Halloween. So again, you're probably not early in the, intermediate term advance. But with that said, you had this huge volume cluster here. You had this pre and sort of post earnings run up here. I guess that was a pre-earnings run. And right now it's chopped, it's had pretty big, it doesn't look much, but 185 down to 165, in a couple of days. But it's still above the 25-day line. So this is just something where, if it chills out a little bit more, maybe you take a swing at it, you put a stop down here. Certainly could reaccelerate higher if the AI stuff keeps moving, but AMD looks pretty good. I'm looking more, like I said, sort of outside the, AI chips, just because most of those, they look great. I mean, you look at NVIDIA, it looks great. Look at NVIDIA. Can you buy it here if you want to? And maybe it goes up here first, but at some point it's going to pull back. They have earnings in a couple weeks, but you're just seeing a lot of these stocks that look great, but the question is, do you want to buy them? So outside of chips and AI, there are some opportunities. This is Shift 4, which I like, and if you just look at the weekly chart, it hasn't gotten going. So a lot of these haven't gotten going, but it has this kind of huge base. It had this huge, you can see the accumulation down here, and just very, very tight in here. It's had like almost like it's like 8 weeks within a point and a half close on the weekly chart, something like that. And no real volume down here, no selling, no buying, kind of like the broad market, like we looked at the mid caps or whatever. It's trying to pop a little bit today. It's just sort of, I wouldn't say it's anything decisive, but just a nice setup. They got earnings in a couple, 3 weeks, it looks like, type thing. So Shift 4 is one. I did want to mention this. I should have mentioned this first. This is Cloudflare. We're still seeing earnings gaps. Now, this week we've seen, I showed you ARM. We have seen, the Snap. Not that Snap to me was some huge leader, but Snap, Pins, okay. We're seeing some of those. Expedia was one that looked good, okay. But Cloudflare, nevertheless, is one that's in the, I guess, sort of a little bit cybersecurity networking. But it's been kind of toying with this 80 level for, I don't know, 2 months here. And then today you can just see it kind of, you can see it's kind of chopped up and down around this sort of 80 level, and today it's kind of leaving that behind. So that is one that's interesting. We'll see how it closes. We'll see how it does next week. But Cloudflare looks pretty good. Okay, but back to the I should have mentioned that first. But then there's Shift 4, Academy Sports and Outdoors. They have an odd off fiscal year, so they don't have earnings coming up for a little bit. But again, you just kind of have this nice base, nice ramp here, whatever weeks up in a row, and now it's 1, 2, 3, 4. So now 6 weeks sideways off the 10-week line. It wouldn't surprise me if some of these things maybe started to pick up the slack. Dave & Buster's play, this one kind of did. I wouldn't say the volume here was huge. It's not the thickest stock of all time, but you can see this is the one that had 2.5, 3 years of just very, very range-bound trading. Seemed to change character here with the market November, December. And again, you kind of have this pullback to the 10-week line or 5-week consolidation, however you want to look at it. And now it's starting to stretch its legs higher. Not saying I'd be chasing things per se, but just seeing more of these maybe stretch their legs. Also in the, this is more of an off the bottom name. This is Boot Barn, kind of a long-term cookie cutter and all that. But anyway, the pandemic sort of played with the numbers here. Earnings went from 2 to 6 in 1 year, starting to come back down to earth here, but it's taken a while. But you can just see the stocks, here's your bear market on the weekly chart. Tried to get going a couple times, really couldn't. Now bottoming out, and just noting it last week, you had a big earnings clue off the bottom and some nice follow through this week. So that looks pretty good. Okay. Biotech, still watching those. I will say again, not to harp on the negative ones, but Neurocrene didn't react well to earnings so far, not broken. This is NBIX, but ITCI, which is intracellular, they do have event risk, Q1, Q2, clinical trials. That's the nature of biotech. So whether you want to play it or how you want to play it is up to you. Earnings in a couple of weeks as well. But again, you kind of had this, a lot of these stocks, just didn't do anything. Nice volume accumulation, nice run here, November, December. And this is kind of, even though it's a totally different sector, it kind of looks like ASO, or it looks like Dave & Buster's, where you have this sort of 5-6 week consolidation, very tight, very quiet. No one's paying attention to this stuff, right? You're paying attention to NVIDIA or whatever, right? SMCI. But nice and tight in here at the 10-week line, starting to push up, a little bit of an increase in volume this week. Let's see if it can get going on a more sort of sustained basis. Back into sort of the chip area. So this is, if you're going to look at some of these, either pullbacks or fresher names. So this is Taiwan Semi, which gapped on earnings. We had it in top 10 here, luckily, and it's really ramped. Mike, what are you talking about? Isn't this extended? It is extended in price, but not in time. It just broke out 4 weeks ago. Not saying, again, you can make the decision what to do. Maybe it doesn't pull back, but if we do get some sort of exhale in the market or tech stocks or rotation or whatever, maybe this thing can pull back and chop around, kind of like we saw AMD do. You kind of have 4 or 5 days where it's kind of down scary, but doesn't really do anything wrong, hangs out for a while, moving averages catch up. Just a name to keep an eye on. ASML, same thing. Pretty much gapped, I think, the next day, and it's run obviously kind of straight up here. But again, so it's kind of extended in price short term, but not time. It's only been running here for a few weeks, so to speak. So not, it could easily pull back, but you're kind of looking for some of these to maybe shake the tree, hold up, and then consolidate, okay? A lot of cloud software sort of niche names. So this is AppFolio. Did I mention this I might have mentioned this last week, but huge earnings move. It really didn't do anything. It was kind of 6 months of nothing. Huge earning moves, all-time record volume. Again, one of those kind of clues, and still acting well, APPF. It is a thinner trader, but it's higher price. So the liquidity is okay. Just a heads up or whatever. Snowflake, this is a much more liquid name. Snow is the symbol. They got earnings. It's not for 3 or 4 weeks, but this is kind of one of these that's not exactly like Cloudflare, but sort of had this sort of longer term resistance and now kind of letting loose on the upside. It looks like this will be the 3rd straight week 2 of above average buying volume. So it's almost like a weekly volume cluster of sorts. Okay. And then just, I mentioned this, a couple more here. IoT, Samsara. This is a name. I love this story. But it's just been very herky-jerky. The valuation is huge. Maybe that's why. But, it kind of has this huge move here, and then it just, chops. And then it kind of gets going here. Oh, now it's ready to go, and now it's chopped sideways. I will say that it's been making progress, but when you look at this consolidation on the weekly chart, messy. When you look at this consolidation, messy. But now you look at kind of the 3rd time, and this is just a much tighter, more controlled. Of course, the market is healthy, but that's the whole ball game. So we'll see what happens. I'm keeping a distant eye on it. I do love the story and the growth, all that stuff. Still has work to do. I wouldn't say it's a leader here, but just IoT is something I'm keeping an eye on. And then just to kind of put it on your list, a few different things. AXON, this one's trying to come out here. It kind of had this, relative to the market, it hasn't come out to a new high, but it's just kind of come under more control here, obviously, compared to this stuff. And just a very tight structure trying to come out here this week. Not the biggest volume, and it is a herky-jerky trader, but looks pretty good. And then just a couple here like HubSpot. Some of these were leaders last year, weren't really leading this time around. Now they're coming out to new highs, but they have earnings next week. So HubSpot is one, HUBS. Just kind of keep an eye on. PCOR, not really a leader, but kind of one of these cloud software names that's in a setup that has earnings next week. And then Airbnb, which has built this kind of nice base. I always keep an eye on these big liquid names that are, popular. Airbnb, everyone knows it, and it's growing, and it's a good company. Eventually you can get, 2,200 funds on it. Maybe it's never going to be a great stock, but sometimes if things kick into gear, it can kind of attain liquid leader status just because of the liquidity, the dominance, the story, and that sort of thing. But it is a nice setup here into earnings. I will say today Expedia is getting hit on earnings, but they're not really able to bring the stock down too much. So just something to watch. So overall, there's a lot of names. Listen, call it a bull market, call it an uptrend, whatever you want to call it, but there's a lot of names working, a lot of names hitting new highs. There's a lot of stuff that's extended. I wouldn't say there's a lot of names that are like super fresh, just breaking out, and at good buy points right now. So whether it's shakeouts or consolidation or rotation, you just want to have your watch list there on one hand on the buy side. And on the flip side, with the things you do own, depends how you want to play it. If you're a shorter term player, obviously you can take some profits, but you want to let most of it run. But just like I said, keep your feet on the ground. Hopefully I'm totally wrong. These videos are completely wrong, and all these stocks are up another 100 points a month from now. I'm all for it. But, I like to play the odds as well, and the odds favor, after 3 months up and things being extended, you have to kind of half expect a little bit of turbulence here at some point. Okay, so overall bullish, but again, keeping your feet on the ground. Okay, that's all the time I have for today. Thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.